Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to the show.
I'm glad to be back, Jim. Thanks for having me.
And Mark, do you still have that special offer for our listeners?
Sure do. If any of our listeners want to subscribe to the VR Trader newsletters, go to vrtrader.com. There's a whole bunch of them there in different categories, gold and cannabis and market timing. And we have our newsletters tied to intraday events as well as the closing events, but different products you'll see, platinum, silver, and so forth, but the promo code is 2020 half off, 2020 half off. That gives you 50% off on any of the newsletters on the website. Special offer for listeners to House Street.
Is the coronavirus panic becoming yesterday's news for the markets?
Apparently so. Ever since the lows of March 23rd, the market's been moving up, anticipating that we're going to pull out of it. There was no question we were going to, Jim. It was just a question of, how fast. And, I wasn't as panicked about the seriousness of the virus as most, because maybe I take a lot of vitamins and I try to take care of myself. But in any event, I succumbed to all the requirements about social distancing and so forth, and my family wanted to do that. And I guess it was better safe than being sorry. But the markets basically are looking well beyond that. The real question is, with the economic damage being done now, will reality hit at some point here? And it's got to at some point and affect the markets, and whether it'll be a correction of this big run-up that we've had or just a little down, minor blip as we continue to move higher.
As the economies of the various states and provinces begin opening, how do you think the stock markets will respond?
Well, they're already moving up, anticipating as we hear stories that states are opening up, they're moving up. And again, the question is, how far will the rally go? We've got the government in there printing money like crazy. We got the old plunge protection team that Ronald Reagan signed into law back in 1988. The government's out there, and much as Japan has been buying stocks and ETFs in that market, I can't help but think either they were doing it already or they will do it if there's any further correction. It wouldn't surprise me if the markets went back to all-time highs this year or early next year, and if we do get another shakeout, unless there's some extraordinary event that triggers something that we can't even imagine at the moment, some extraordinary circumstance, some war or something that we just can't predict. But notwithstanding that type of event, the markets seem to be hell-bent to move higher. So we have the sell May go away phenomenon approaching now, and I'm not sure if it's going to start May 1st or the end of the month, but there's also the presidential cycle year. Markets tend to pull back into or near the election as well. So there's different things we have to keep an eye on, but I think the market's discounting the future and wants to move higher, and if not, the government's going to apparently help it along from what we're hearing.
Is America likely to see a strong economic rebound as the states reopen and repatriate manufacturing?
Tough call. I'm not an economist. I can't measure all that. I think there will be, rebound, but I don't think we're necessarily going to go back to the levels that everybody is hoping for so fast, because people are not willing to get close to one another. They're still going to be doing the social distancing. I think society as a whole has changed. It's crazy now. Every time people come up to each other before this event, everybody would hug everybody, and I don't think that there's going to be a lot of hugging going on in the public arena as we've seen it for many years past. So just the fact people are going to be a bit standoffish, I think, is going to keep things at a bay on a certain level. So whether that's going to affect the manufacturing or not, it's a tough call. I think we're going to try to get back to where we were, but it's going to take some time.
Could a recovery be slowed down because baby boomers, being older people, would be more reluctant, I guess, to get back to being kissy-huggy? But they're the ones with the money. Meanwhile, millennials who don't have money would be the first to get out there and start socializing again.
Well, they're doing it now already. I have a few kids, and they're all from 40 years down to 23 years of age, and they're not adverse to interacting socially or being out there. They figure this is an old person's disease, and they're sort of immune on a certain level. So you might be right that if the older folks might be staying in the retirement homes or staying in their retirement villages and houses and being a little bit more reticent to get in and about, but the younger people I don't think, share that attitude.
We'll have more with Mark Leibovit right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mark Leibovit. Mark, could we be seeing the end of globalization with China now being considered an unreliable supplier, not just because of the virus, but the way they've treated a lot of clients where, for example, Canada flew 2 planes to China for medical supplies. The supplies never showed up and the planes had to leave empty.
So, we're not going to get the cooperation with China? Is that what you're saying? Or people are going to avoid China?
Are we going to try to build necessary things like prescription drugs and medical equipment at home again?
Oh, yes. I think there's a big push in the U.S. for that. I think people realize that we're too dependent, particularly on the pharmaceutical side. And unfortunately, for so many decades, everybody has been looking to manufacture and do business in China because it's cheaper. And now it's backfired on everybody because we realize we're way too dependent. And then the bigger risk is, the military risk, too. I mean, China has ambitions across the planet. Not only what they're doing in the South China Sea, but investing and expanding all over the world, anywhere from northern Italy into Africa, and they're all over the place. There's no question that the cycles are pointing to China being the world leader in the decades to come. I mean, I said this years ago. It's clear. I mean, basically, we supported the turnaround, we endorsed it, we financed it, and it's to our own detriment. Now, whether if we start manufacturing, whether it's drugs or all other kinds of products here in the U.S., can change that cycle and that trend. Only time will tell. But my gut feeling is China has made such tremendous inroads internationally and worldwide in investments, and they're just involved in every damn thing. I think the future says China is going to take over the U.S. role in the decades to come.
Now, I'm not saying China deliberately released this virus on the world, but could they exploit it by, say, going to these poorer South American and African countries where they're seeing starvation showing up now because of the lockdown, offering aid to that particular country, but in return they have to supply China with a Navy or Army base?
Anything is possible, Jim. You're speculating that that could be. I haven't heard that theory, but the power of the dollar, so to speak, and the economy could dictate countries cooperate. It may only be the U.S. that decides to become more independent, but other countries that is, don't have the production capability, technology, resources that we have, and they might rely on China and indeed agree to such a relationship. So I can't disagree that could happen.
Well, right now Russia has sent medical teams to Italy, even though Russia is being hit by the virus. And the reason I say China might try to exploit this is I'm thinking of Sri Lanka, where after a lengthy, bloody civil war, their harbor was destroyed, and China promised to rebuild it, but the price was you have to allow our Navy to dock there.
Makes sense. They're good negotiators. I would do the same thing if I was in their position.
Because I'm thinking the U.S. did the same thing after the Second World War. We'll help rebuild there, but we get to keep an army base.
Right. So they're following the U.S. model. Well, I guess we're good teachers.
Could we see inflation in some parts of the economy and deflation in other parts?
Anything is possible. I'm a little more concerned about just deflation because of the all the financial finagling that's been going on, the printing of the money, and I think my greater concern is that deflationary forces, particularly we can discuss how fast the economy is going to get back on track and how many businesses are going to start manufacturing or how many jobs are going to be regained. But I'm a little now. This differs from my comment about the markets. The stock market may ignore this and may decide that investors may decide this is the only place for your money, and stocks may go up anyway. But I'm more concerned about deflationary forces, frankly, based on what position the governments have taken and how to handle this crisis. Europe, of course, blew it, and their money printing didn't do any good. And we're going nuts on this end here in the U.S. and Canada to a less degree. So I think at least on the short to near term, I'm thinking deflationary forces may upend the inflation that everybody's expecting.
We'll have more with Mark Leibovit right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, is the U.S. likely to see a short or long recession?
Good question. I'm not an economist. My gut feeling is that there will be, some recession. We're already, the numbers are going to start showing in the next quarter and so forth. But if you were listening to Jerome Powell at the Federal Reserve yesterday at his post-meeting announcement, he was looking for, a sharp rebound by the third quarter. So, the question is, what is the Fed doing, or what does the Fed know that would prevent or mitigate a recession taking hold, and one of the tools they have is making money easily available, driving the markets higher and higher and higher, which instills confidence in people to hire and to invest and so forth. So the recession, there should be something, but I'm just wearing the contrarian's hat here, and if enough, whether the tactics that are employed have long-lasting effect or not, that's the question. It can blow up on them too, but I think the pressure is going to be to try to avoid the recession as much as they can, though there should be some negative numbers obviously being reported here in the next quarter or so. But I don't think it, based on what I'm hearing and seeing, and you have an election coming up in November, and a lot of political pressure to keep things moving or get things moving quickly. So at least for 2020, maybe 2021 or into 2022 will change. If there's a political change in this country, I think over the short term, I think the recession is going to be somewhat minimized.
Even though the Fed has zero interest rates, is there any way for the banks to actually kick that or force the banks to kick that cheap money out the door, because usually during a recession and afterwards, the banks are really reluctant to lend money to anybody they think is even semi-risky.
Well, this new Small Business Administration program that they pushed through Congress here in the U.S. Is supposed to, I guess, partially be an offset to that, whether they ran out of money on the first go-around and now there's more money available and maybe they're going to have to initiate it again. But I agree, the banks are never very happy about lending money, and they were basically taking money from the federal government and reinvesting it in bonds and working off the spread of it, the overnight rate versus what they could get in the bond market, and just trying to be real conservative. And there was no strong guidelines about banks lending out to needed money to businesses. And I don't know where that is right now, whether the government forces that are in play here are aware that the banks may repeat that same pattern and will be reluctant to lend, or whether they're going to cooperate more because of the virus situation this go-around. I know Trump's been meeting with a lot of the bankers, and they said there's supposed to be all this cooperation in the banking industry, so I'm hoping this go-around the banks would be more willing, particularly since this SBA, Small Business Administration program, was offered and the banks were involved in that. So I'm trying to be more optimistic that this cycle they're going to be more cooperative than they were in the 2008-2009 financial crisis.
We're hearing gold and silver could end up having a great 2020. Your thoughts?
I'm not that excited about them right here. I'm bullish toward the end of the year into next year. I think seasonal patterns and possibly some of these deflationary forces that I just had mentioned to you. I guess the most classic one was the big break we just saw in crude oil. But I think there is a play, but I'm fishing for it. I think they got overdone here, and I think you can do some better investing, let's say toward the end of the summer, maybe into the third quarter, and maybe you'll get some better prices. So I'm looking, for gold back down into the 1500s, if not back to the 1400s. That would be sort of my call. Somewhere between 1450 and 1550 range makes more sense to me than where gold is right now. Now, of course, I'm giving you the U.S. dollar equivalent for that number.
Does crude look like it's getting stronger?
Yes. Definitely. In fact, we're long a lot of oil stocks in our service and ETFs and so forth. There's a political push to get crude oil higher to save the ailing petroleum industry. So there will be a push, and what tactics will be employed, I can't say for sure. Whether you can speculate about what the government can do, what Trump could do, restricting any imported oil, or for providing government subsidies to oil companies. There's all kinds of things, or loans. So I think you'll see crude oil move higher, and I wouldn't be surprised to see it back into the 30 to 35 range. And possibly, if there's an extraordinary event, we've got a lot of threatening words between Iran and the U.S. right now. It's not covered that much in the press day to day, but there's a lot of stuff going on out there, and I think a bit of a shooting war could unfold here at some point, and that could help the crude oil price as well. So I'm bullish on crude oil.
Is Canada, with leadership that prefers political ideology and higher taxes over growth and prosperity, especially when it comes to natural resources, likely to experience a greater economic downturn?
If they keep that up, I would agree that's the case. I mean, I don't want to get into too much politics here. I don't agree with a lot of the politics in Canada, and I definitely don't agree with the Democrat politics here in the United States. So the socialistic viewpoint is not something I'm comfortable with at all with, and as far as restricting development of natural resources, and I don't know exactly all the details of what the Canadian government is doing and not doing, but whatever it is, we have to think capitalism, and I think responsible capitalism. Obviously, you don't want to plunder all the resources, but you want to do it in an intelligent way, because people do have to make a living, and we do have a functioning society, and you can't only be thinking in terms of the green planet is the only thing that we're going to survive for. We could all starve to death and have a green planet, so we have to think in terms of a balance.
Well, a report that just came out said that even with the world on lockdown and car and industrial activity shut down, we have only seen a 15% reduction in so-called greenhouse gases, making the targets from the Paris Accord in 2030 very unlikely to be met. And this is with everything basically shut down except essential services. Were these targets pie in the sky? And I said it's
absolutely. I mean, I'm not a believer in the green movement. You know, what's the term now? I'm just losing my global warming movement and so forth. I mean, it's all based on, you know, follow the dollar. You know, who's going to make money off this? There's political gain. There's the reasons why this was all created. I don't think it's all real. I think you do have to be environmentally conscious, but I'm not a follower of that belief at all. Never did. A lot of science doesn't support it, and so I guess that's sort of where I'm at it. I think you just have to balance, you know, environmental protection, but not to the extent where you shut down airplanes, you kill all the cows. I mean, all the kind of nonsense you're hearing from people like AOC, the congresswoman here in the United States, about what we need to do to save the planet. I think a lot of the climate change that they're talking about is natural, and we've seen this over the centuries, and they're pointing to only human actions causing it, which is not necessarily true. Part of it is, but most of it is just planetary conditions change as they have over the millions of years that we have records so we can track what's been happening.
Well, a climate change scientist at the University of British Columbia says they cherry pick numbers, like they start dating something from 1979 or from 1938, not mentioning that we had record low temperatures in North America through the early 70s, and they were worried we were going into an ice age. The 1930s early on had higher CO2 levels than we do now, and ocean levels have been rising the last 20,000 years.
They forget about that, right?
Yeah, so again, you know, if I look at how many neighbors live in my building today compared to yesterday, there could be a big change if 10 of them just moved out. Meanwhile, what are your thoughts on the Canadian dollar?
That's a good question. Let me think about it. I'm still thinking the U.S. dollar should be strong this year. I'm not looking for a big correction. I know many are looking for that, hoping that gold and silver and commodities take off since they're based on U.S. dollar prices. I don't see much of a change in the Canadian dollar. I think it's still going to track along as it has with the U.S. dollar, and U.S. dollar should remain relatively strong this year, and we'll just have to evaluate. I mean, this trades up and down. You know, we were trading the dollar short for a short period of time, but we covered it, and I'm just thinking money's going to flow into the dollar. I think it's a bastion of safety for the world, and I think that's going to both help the stock market ultimately as it moves higher, and unfortunately it may not be the best for the Canadian dollar, at least the way I read it right now.
Do you have any investing wisdom for us in these volatile times?
Investing wisdom. Basically, I would say we're looking for new highs in the market during the course of the next 12 months or so. But over the near term, between, let's say, mid or late May into the summer, into fall, that period, you might experience a bit of a correction, and that might give you another opportunity both to get into the stock market and also the precious metals, which I still like toward the end of the year. So I wouldn't be chasing stocks here. They've had a big move, but I'm not a bear either, and I'm still willing to look at special situations. But if I had to guess, by the end of May into fall, we would experience another correction, and before the end of May, you may see the market a lot higher first. So it may not turn down here on May 1st as many people are hoping.
How can people find out more about the Leibovit VR newsletters?
VRtrader.com. That's Victor Robert, VRtrader.com. Thank you.
And perhaps remind our listeners again about the special offer.
Sure, Jim. It's half off of any of our newsletter products using the code 2020 half off. One phrase, 2020 HALFOFF. Thank you very much, and a pleasure being on your show.
Mark, looking forward to talking to you next week.
Take care.
Bye-bye. My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.